Okay, good morning. Now we have to discuss about another accounting standard. Accounting policies, change in accounting estimate and errors. Latest up to August 29, 2020. A simplest version. Now I want to discuss about the accounting standard that is known as accounting policies, changes in accounting estimate and errors. Okay. Every accounting standard has significant place in modern accounting, as those give unprecedented glory to the already fast-growing profession of the world. It is accountancy. In this juncture, we have to understand the latest and simplest version of IAS 8 and INDAS 2. First of all, we have to discuss what are the relevant accounting standards related with accounting policies, changes in accounting estimate and errors. First, IAS 8, International Standard. Second, Indian Accounting Standard, INDAS 8. Now we have to look into what are the differences between IAS 8 and INDAS 8. Okay. The words approval of the financial statements for issue have been used in context of financial statements in the case of INDAS 8. In the case of INDAS 8, the relevant words are approval of the financial statements for issue. In the case of IAS 8, relevant words are authorization of the financial statements for issue. Now, there's a difference among those words between INDAS 8 and IAS 8. Then, another difference, the relevant statements are statement of profit and loss and balance sheet as far as INDAS 8 is concerned. Likewise, the relevant terms are statement of comprehensive income and statement of financial position as far as IAS 8 is concerned. Okay. No other major difference between INDAS 8 and IAS 8. Therefore, further discussion belong to this session is equally applicable to IAS 8 and INDAS 8. All other concepts are similar to INDAS 8 and IAS 8. First of all, we have to discuss about the scope of the account standard. These standards set out criteria for selecting and applying accounting policies. The standards related with the accounting policies, selecting and applying accounting policies. Likewise, the standard helps us to account for changes in accounting policies, to account for changes in account estimate. Last but not least, this accounting standard helps us to correct the errors. Okay. Then, what is the objective of the standard? The objective of the standard is to prescribe the criteria for selecting and changing accounting policies. The standard teaches us when we have to select the accounting policy, when we have to change our existing accounting policy. Likewise, the standard prescribes the accounting treatment and disclosure changes in accounting policies. The standard helps us to change our accounting estimate. Likewise, the standard helps us to correct our previously made errors. Okay. Then, what is accounting policy? The standard helps us to find out a relevant accounting policy. The standard also helps us to account the changes in accounting policy. But what is accounting policy? Accounting policies are the specific principles, bases, conventions, rules, and practices applied by entity in preparing and presenting financial statements. Accounting policies are the specific principles, bases, conventions, and practices applied by an entity in preparing and presenting statement of profit and loss and balance sheet. But as far as IAS is concerned, it is statement of comprehensive income and statement of financial position. Okay. Then, selection and application accounting policy. What are the important principles connected with the selection and application accounting policies? The standard helps us to find out a suitable accounting policy. Likewise, it helps us to change our existing accounting policy. Okay. Then it should determine the accounting policy by considering the relevant INDAS. Relevant INDAS, the entity should determine the accounting policy by considering the relevant INDAS. That means accounting policy of entities related with the relevant INDAS. What is accounting policy? What is accounting policy? What is accounting policy? We have already discussed about it. Accounting policies are the specific principles, bases, conventions, rules, and practices applied by an entity in preparing and presenting the financial statements. I may read an example of an accounting policy. Star Limited had purchased a building on April 1, 2004. It is the only asset in building class of asset to decide to adopt a revaluation model for the building. During the financial year 2019-2020, Star Limited decided to change the accounting policy for the building to cost model. Okay, this is the accounting policy. To adopt revaluation model is accounting policy. To adopt cost model is another accounting policy. From changing revaluation model to cost model is an example of changes in accounting policy. Okay. The standard helps us to find out other than accounting policy. Then it should determine the accounting policy by considering the relevant INDAS. In the absence of an INDAS that specifically applies to a transaction, other event or condition, manager shall use his judgment. Okay, this is the most important point. If it is an INDAS, no problem. Please use the INDAS to determine the relevant accounting policy. If there is no INDAS related with the accounting policy, then the manager shall use his judgment in developing and applying accounting policy. That results in information that is relevant and reliable. It's the most important point. In the absence of an INDAS that specifically applies to transaction, then manager shall use his judgment in developing and applying an accounting policy that result in information that is relevant and useful. Okay. In making that judgment, the manager should refer so many resources. What are the resources? The manager should refer resources in the descending order. I may read the name of certain sources. Manager should refer those sources in the descending order in making that judgment. For finding out relevant accounting policy. Okay, what are the sources? First, INDAS dealing with the similar and related issue. Second, the conceptual framework related with the INDAS or IAS. First, INDAS or IAS dealing with the similar and related issue. Second, the conceptual framework related with INDAS or IAS. Then, first, INDAS dealing with the similar and related issues, or IAS dealing with the similar and related issues. Then second, the conceptual framework related with the INDAS or IAS. Okay. Now there's an important point. The accounting standards demand consistency of accounting policies for similar transaction and from period to period. There should be consistency. The accounting standards demand consistency of accounting policy for similar transaction and from period to period. There should be consistency from period to period. Besides, there should be consistency as far as similar transactions are concerned. Then, how can you change in the accounting policy? Changes in accounting policy. An entity shall change an accounting policy only if the change is required by INDAS. If the change is required by INDAS, then please change it. Or result in the financial statement provide reliable and more relevant information about the effect of transaction, other event or condition on the entity's financial position, financial performance, or cash flow. Okay. An entity can change the accounting policies on two occasions. First, is required by INDAS. Second, which result in the financial statement providing reliable and more reliable information about the effects of transaction, other events or condition on the entity's financial position, financial performance, or cash flows. Okay. Then, first time adoption of accounting policy is not a change in accounting policy. If you decide to adopt an accounting policy, it is not a change in accounting policy. How can you account changes in accounting policy? The standard gives the information. Entity shall account for the change in accounding policy resulting from the initial application of INDAS in accordance with the specific transitional provision, if any, in that INDAS. That means entity should change its accounting policy as per the relevant concept of the relevant INDAS. If the relevant INDAS gives the procedure about changes in accounting policy, no problem, please adopt it. Otherwise, please listen. Otherwise, when the entity changes in accounting policy upon initial application of INDAS that does not include specific transition provision applied to the change or changes in accounting policy voluntarily, we shall apply the change retrospectively. We shall apply the change retrospectively. That means if the relevant INDAS gives the procedure for changing accounting policy, no problem. If the relevant INDAS do not give about the do not speak about the procedure for changing accounting policy, then the entity shall apply the change retrospectively. Then the entity should make the change retrospectively. The word is most important, retrospectively. If the relevant INDAS does not speak about the procedure for change in accounting policy, then the entity should make the change retrospectively. The word retrospectively is the most important. Okay, thank you.